Time now for the markets, though. Potential wheat damage or weather damage to wheat in the U.S. Is showing up in the Midwest.
But analysts believe the development is already dialed into the trading price that is in the market right now. Also ahead this week in our segment, U.S. rice exports to Mexico continue to slip. Near-term U.S. soybean supplies remain tight, while cattle placements are lower than expected. We begin in row crops, where U.S. rice's dominant position in the Mexico market is described this week as being under attack. During the first quarter of this year, total U.S. rice exports to Mexico were now reported to be down a whopping 27% from 1 year ago. The USA Rice Federation says part of the decline is a result of Mexico suspending import duties on rice, which erodes one edge the U.S. had over some competitors. Other factors at play include Vietnam and Thailand being allowed to undercut U.S. prices, and the fact that high-quality rice from Uruguay and Asia is making inroads in the Mexican market. As we produce this program Thursday morning, soybeans were trading 3 to 8 cents lower. Analyst Tom Fitzenmeyer says concerns about tight U.S. bean supplies right now may be unfounded.
The U.S. is an island of tightness. And so then you have to triangulate, okay, how's that going to get resolved? Because the rest of the world, there's plenty of beans. We're probably going to have plenty of beans this fall. So how does this little short-term thing get reconciled? Well, the Chinese are probably going to have some cancellations. There were some net cancellations both from unknown and China in this week's export sales report. You're going to see some pretty good imports coming in from Brazil and Argentina, and Canada is going to make up for it. And everybody's running around here worried about old crop. The funds are all long, all kinds of old crop. And I look at it and I go, okay, if that's so critical, how come the basis is 75 cents worse than it was a year ago? How come the May-July spread is at almost even money this week when it was a $1.10 premium last? If it's so tight and end users are so out of beans, why is that situation? And the answer in my mind is that we're probably going to have enough beans. Most of those end users have figured out how they're going to make that work. So I'm not saying there's not more upside and the futures won't get carried away, but I think that high was probably put in that here a while back, and rallies there need to be sold.
Let's break from the markets to look at the trivia quiz for this week. An important centennial is coming up on May 8th. Here's our quiz question. What document established the Extension Service in Mississippi and the rest of the U.S. 100 years ago? Is the answer the Smith-Lever Act, or the Manhattan Act, or the Sarbanes-Oxley Act? I'll tell you at the end of the markets. We move into livestock now, and the lead story this week is the recent cattle on feed report. Extension economist Brian Williams has some analysis. Well, Brian, if you had to give a headline to that April 25th on-feed report, what would that be?
Well, I think I'd say something to the tune of cattle supplies tighten for U.S. feedlots, and I think that'd be a pretty accurate depiction of the entire report.
So how were placements running as of April 1st?
Placements were down about 5% from a year ago at just under 1.8 million head. And that was down towards the bottom end of what our expectations were.
Could that possibly indicate maybe pasture conditions had improved some in other parts of the country especially?
Potentially. Here in the southeast, the pastures look good. There's some other states like Texas, Oklahoma, Kansas, and Nebraska in those plains that they're still in a bit of a drought, but I think they're looking better than a couple years ago.
Now, what about the total number of cattle on feed as of April 1st?
Total number was also down about 1%. And again, that was towards the low end of what the expectations were.
Now, I understand also the heifer number was also down as far as when we look at total U.S. inventory. Could that possibly indicate some herd expansion beginning?
It could. Heifer placements were down 6%, but steer placements were up 2%. And so what the market was saying was bring in some more cattle, and the producers were saying, okay, we're going to give you the steers, but we want to expand our herd. We're going to keep our heifers here on the farm.
Okay, can we draw any inference from these numbers in this report as far as at the retail meat counter, whether beef appears to be moving or not moving, especially in the face of what are higher retail prices right now?
Well, looking, I guess, from a consumer perspective, it carries on to some other numbers. The marketings were down 4%, which was around expectations, but that means there's less beef on the market. And so it's helping to keep our prices high and well above what they were a year ago. So but the demand, there was also a survey that had come out over the last week from Oklahoma State, and that's saying that the demand is still there, even with these higher prices.
And any likely crossover from this report to feeder cattle, to what impact there might be there?
It has had a positive price impact across the board. We've seen feeder cattle be real bullish over the last few weeks. Same with fed cattle. So it's really had a positive impact across the board on prices.
Before our feature story, let's check out the trivia answer for this week. The correct choice is A. 2014 marks the 100th anniversary of the Smith-Lever Act, which formalized the Cooperative Extension Service.